Welcome to the Critical Point Podcast. It's March 20th, and this is Rich Posson, and I want to discuss what the model research is showing for the economy. And we're going to take a look at U.S. unemployment rate on a long-term basis. I want to discuss the 9-year business cycle once again, because we are at a critical point of that cycle relative to possibility of a recession. Okay, so let's take a look at the 9-year cycle. We can see it bottomed in 1979, and unemployment soared as the U.S. fell into a recession. And then we went back to growth, a boom period. Unemployment declined into the next 9-year cycle bottom, and then we had yet another recession. And we did this again and again, wash, rinse, repeat. Okay? Now, it's not exactly 9 years. That's just a name or a label. The definition is 8 to 13 years from bottom to bottom. So if you count each one of these years, you're going to get into 8 to 13 years and then see we had another recession and another rise in unemployment. Now, what causes this cycle? Well, basically during the boom period, we reach a point of peak economy, therefore a bottom in unemployment, therefore increasing risk of a recession, and it relates to the fact that there's only so much we can borrow. There's only so high a price we want to pay for real estate, commodities, cars, whatnot. And we also get in a situation of how do we really want to expand our businesses? And sooner or later, it even develops into a psychological process where we become concerned that things are going to slip. It can't last. The good times have to end. And so the end result is we work ourselves into a recession. We stop spending, we panic, our investments go lower. And the interesting thing is we do this about every 8 to 13 years. Now, other cyclicals count this cycle a little bit different. They'll say it's a 7 to 12-year cycle. It's also called the Juggler Cycle and has been taught in various economic classes, and I believe even the Federal Reserve may follow it, or at least they read one of my papers off a website, or at least someone at the Federal Reserve did, as well as the World Bank. And I haven't discovered this. Yes, that's my name, and I discovered it on my own, but this cycle is known well before my time. Economist Schumpeter wrote of it in his Business Cycles book. At any rate, this is a technique that you can calculate from a recession to the next recession, so you have a window, a range of years to when you want to start to be cautious of thinking something's going to go wrong. Okay, so back in the 2000s, we noticed we got this gigantic spike up. This was actually a super cycle as well as the 9-year cycle, and the same thing occurred in the 1980s. And so we know in the 2000s we had the Great Recession. Okay. Now we then see we had this lengthy decline in unemployment, a lengthy boom. Some people are saying it's record length, but in cyclical terms, it's not. It's just near the maximum length, the maximum amount of time. So what the model is suggesting is that as of 2019, it should have been the last year or latest year for a 9-year cycle bottom in unemployment, meaning probabilities should have soared to 90% that we're going to have a recession and a rise in unemployment. So I was worried at the start of this year that the unemployment dipped back to 3.5% to match the 2019 low. I was worried, can we have one extra year? And I would not change the model. I would not stop using the model if it did. But the point is you'd like to see history repeat. Well, it's looking like it's going to, because there is talk this morning of as much as 2 million initial jobless claims to be seen in coming reports, whereas normally weekly jobless claims are like 250,000, 100,000, things like that. So there's going to be a gigantic surge. We've already seen it this week in the jobless claims report, and there's even a bigger jump coming. So it's more than likely we're on our way now of spiking unemployment. And I've said for a few years now I was anticipating a mild to the mildest recession, and I thought I'll just be happy if we get unemployment back to 5%. Now I'm wondering, how high will it go? How devastating will it be this year? Nevertheless, we think I may not be able to forecast how high of unemployment. I don't know if anyone can, but at least we got the direction and timing right. The cycle has repeated when I had been nervous that the Federal Reserve had enough ammunition still to eliminate a recession period. And there was even discussion by some of the Wall Streeters, maybe something has changed after all these decades, that we're never going to have a recession again. We just keep printing money. Well, the point is you can have a disaster that's just greater than the Fed can deal with, and that's what we're seeing right now. This is an entirely different fundamental story, and if you look at all these 9-year cycles, the story up and down in this unemployment and the recession and the boom periods, the story was always a little bit different to sizably different, okay? We're going to have a brand new fundamental this time because of a panic over the pandemic as the number one impact. The number two impact is the actual damage of the pandemic. So we got new history, new fundamental, but nothing has changed in terms of the business cycle and how we behave and act and do business. We're on our way to a recession and higher unemployment. Now, unemployment should top out no later than 2022. The economy actually should bottom out ahead of a top in unemployment. The economy is probably going to bottom out this year or next year. My guess is if we started a recession today, we probably can't put a bottom in or put an end to the recession until about July or later. Okay, so once we've topped out on unemployment, the 9-year cycle will be down, and we should see unemployment erode and the economy go into boom phase, and the stock market, which is probably going to bottom ahead of the bottom in the economy, which will bottom ahead of the top in unemployment. Okay, and we're just going to see this decline eventually into the next bottom, peak economy, and then we're going to see a recession. So sometime in 2027 to 2031, it will top out, the boom will be over, and we will have another recession. Fortunately, it looks like super cycles should not make an impact to the 2030s or 2040s when we can get a dramatic up move in unemployment. But the point is, this is a different story this time. Maybe we're going to get new statistics and be shocked at how high unemployment goes for this particular 9-year cycle. So hopefully I've taught you what are these cycles. They're time cycles. The business cycle model uses many cycles from very short term to very long term and comes up with a story that it can explain all or nearly all price fluctuation, and the same for some data. Okay, the 9-year cycle is very dominant, prominent in unemployment. It's a nice tool to show what is a single cycle. How does it work? Bottom line is, yes, we're probably going into recession. It's not the end of the world. I hope you will follow us because we're going to prepare for the next boom cycle this decade. As always, manage your risk relative to the analysis of others. Thank you.